Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that everyone had a fantastic weekend. The Dow closed higher on Friday of last week, up 482 points, but down 471 points week over week. The S&P 500 closed higher on Friday of last week, up 49 points, but down 98 points week over week. The Nasdaq closed higher on Friday of last week, up 118 points, but down 491 points week over week. In overnight trading, Dow futures traded lower and are expected to open down this morning 68 points. West Texas Intermediate WTI crude closed up 85 cents a barrel on Friday of last week to settle at $75.88 a barrel, up $1.90 per barrel week over week. U.S. commercial crude inventories increased by 4.6 million barrels week over week. U.S. crude inventories are 7% below the 5-year average for this time of year. Total motor gasoline inventories increased by 200,000 barrels week over week and are 3% below the 5-year average for this time of year. Distillate fuel inventories increased by 400,000 barrels week over week and are 12% below the 5-year average for this time of year. Propane and propylene inventories increased by 2.6 million barrels week over week and are still 19% below the 5-year average for this time of year. Propane prices continue to rise, and so does LNG prices, as Asian LNG spot prices hit an historic high on Thursday of last week. Northeastern Asian LNG spot prices surged to an all-time high on Thursday of last week as buyers across the world compete for barrels due to seasonably low inventories in Europe. November front-month spot prices closed at $34.45 per MMBTU on Friday of last week in the UK. Supply tightness has also been further exacerbated by higher demand from South America, where countries are grappling with lower hydroelectric power output due to droughts. These developments have been a plus for coal and rail, ironically. The higher nat gas goes, the more coal we use here and elsewhere. In fact, coal prices soared to the highest on record as China accelerated its buying of late. High-quality thermal coal loaded on ships in the Newcastle port in Australia surged to $203.20 a ton last week, breaking a previous record set in July of 2008. Newcastle is a benchmark price for Asia, the world's largest market for coal. Coal traffic is up significantly, and so is consumption here in North America year over year, and exports are up as well. This has and continues to be a great news for rail, but not so good for the environment, arguably. Oil is lower in overnight trading, and WTI is poised to open down 11 cents per barrel from Friday's close. Total North American rail volumes were down 1.9% year over year in week 38, resulting in quarter-to-date volumes that are flat year over year and year-to-date volumes that are up 8.2% year over year. 4 of the AAR's 11 major traffic categories posted year-over-year decreases, with the largest declines coming from intermodal, which was down 7.3%, and motor vehicles and parts, which was down 28.4%. The largest increases came from coal, which was up 21.5%, and metallic ores and metals, which were up 18.2%. North American rig count is up by 10 rigs week over week. The U.S. rig count was up by 7 rigs week over week and up by 262 rigs year over year. The U.S. currently has 528 active rigs. Canada's rig count was up by 3 rigs week over week and up by 90 rigs year over year, and Canada's overall rig count is 165 active rigs. Collectively, we're up 352 active rigs. International rig count, which is released monthly, is up by 10 rigs month over month and up by 85 rigs year over year. Internationally, there are 787 active rigs. A few things that we're keeping an eye on. SWARS. PFL attended the SWARS conference last week. This was the best conference in 2 years, hands down. The final count of attendees was 595 people as America's rail industry got back to work. The speakers were great and the organizers of SWARS did a fantastic job. Everyone was looking their best. It was nice to wear a suit again, shook hands. Who said we weren't going to shake hands again? And even hugged where appropriate. People were networking, once again cutting deals, and the tone was upbeat, and heck, the hotel even ran out of vodka one night. For information as it relates to SWAR's latest, give us a call at the desk at 239-390-2885. The next SWARS meeting will be in the Woodlands in March. We will see you then. God willing, PFL will be attending in full force. Enbridge Line 3. Enbridge announced on Wednesday of last week that Line 3 will be operational as of October 1st and that it would begin flowing oil on Friday of last week. Enbridge began filling the line on October 1st with line pack. Line pack is needed to fill the pipe initially, so as one molecule enters one end of the pipe, one molecule comes out the other. Typically, all pipelines own the line pack. Enbridge then intends to offer the full 760,000 barrels per day in November of this year. Earlier this month, the company told shippers it would offer 620,000 barrels a day per crude of oil capacity during the month of October. On the back of the Enbridge news, Canadian basis numbers tightened on Friday of last week. WCS began the trading day on Friday, the first day of the cycle, at minus 1160 per barrel against WTI, before reaching an intraday high of minus 1150, but eventually closing out the session at minus 12 a barrel. The impact on rail is obvious with more pipe now online. Rail that was itching to get started on a commercial basis is taking a pause. WTI still would provide a decent netback to the producer even at these levels. The reading of PFL's rail report today is an absolute must. Not only do we go into details on items discussed in today's podcast, but summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, talk about China's energy and manufacturing woes, the latest on KCS and CP's merger, and dive into the latest U.S. employment situation. Many of you may not know, but PFL pays cash for unwanted railcars. Please call PFL today for competitive pricing. While scrap prices are still high and space is available, space is tightening up, so give us a call today, and make sure to check out our latest reports. We've been very active with return on lease situations and a variety of repair, cleaning, and so forth. Hope everyone has a great week. Give us a call if you want to troubleshoot anything at 239-390-2885, or of course go to our website, pflpetroleum.com. Thank you folks for the opportunity of presenting this podcast to you, and we look forward to serving you.